I just made 100 grand in a month. That's way more than architect does all year. So am I worthy of this?
Today, I have an incredibly special guest with me today, David Capablanca, a man who really came out of nowhere from a very, very different background than most traders do.
All my 20s was architecture. I didn't even know anything about stocks. I didn't know what a stock was. In grad school, it's like really cool. You're designing the futuristic stuff. You learn all the hot software of the time. And then you go to the real world, you're designing bathrooms and staircase.
The thing about short selling is, of course, it can be very lucrative when you're right, but it's an asymmetrical bet. Were you aware of those risks when you first started?
So early on, me having only a $2,000 account, while I studied all the histories, all the manias, tulip mania, the South Sea bubble, 1920s. I love the history lessons because like human nature is part of that, a big part, and it never changes. So you see a consistency there and you can relate it to now.
Hi everybody, this is Boris Schlossberg. Welcome to yet another episode of The Trading Battle, where we interview some of the best traders across the world and teach you their edges so you can square up and trade much better in the market. Today, I have an incredibly special guest with me today, David Capablanca, a man who really came out of nowhere from a very, very different background than most traders do, and has achieved superior stardom, amazing returns. More importantly, returns that have been audited over and over again by the likes of Business Insider and other verified auditors to basically show that this is a guy who not only talks the talk and walks the walk, but actually does the business. So welcome to the show, David. Nice to have you. And say hi to everybody.
Hey guys, and yeah, thanks for having me, man. Looking forward to this.
Wonderful. David, you really came to trading in a very circuitous way. You started out essentially as an architect, right? You studied architecture at the University of Florida. Tell us a little bit about how your passion in the market got started and what really turned your fortunes towards this venue in the world.
Okay, so yeah, I did my undergraduate at University of Florida. Go Gators. I did my master's at UCLA. And architecture school is a long journey, So it's 4 years undergrad, 3.5 years graduate school, and in the middle of that, I had like a brain operation. That's a whole nother story. We don't got to get into. That's a deep one, but it prolonged. Like I was an architect, and I was doing my best with architecture. I loved architecture. I still love architecture, but all my 20s was architecture. I didn't even know anything about stocks. I didn't know what a stock was.
Were you at that point, or did you move from Florida to LA to practice?
Yeah. So University of Florida, and then I applied to grad schools, some in the East Coast and one in the West Coast, UCLA, and I got into UCLA. It's a very good architecture program for grad. One of my favorite architects was teaching at the school. Two architects. Frank Gehry and Tom Main. I don't know if you're familiar.
Wow, of course. Frank Gehry is a world famous architect.
Yeah. So they were teaching at UCLA.
Frank Gehry, of course.
Absolutely. He got some stuff in New York over there. I don't know if you know the Beekman Towers and a lot of other stuff. Beautiful.
I happen to do a little bit of architecture aficionado, yes.
Nice.
Much to the chagrin of all my children, who I forced to look at this building, look at the relief, look at the pre-war architecture. They're so tired of me pointing out every single building to them in New York City. But it's a wonderful, I absolutely adore the art. So, it's wonderful. So you wound up, you basically managed to skirt bad weather everywhere you went. You managed to be in Florida and then California. You've played the perfect hand.
So I'm from Miami originally, so I went to Florida. When I applied in the East Coast, I don't know if I could ever survive the winters there.
Yeah.
And I was like, what's similar to Miami? I guess the weather and the beach. I was like, I can do LA. So that's what brought me to LA. It's a simple decision like that. The weather. And I got two of my favorite architects teaching there, and that's why I went. That's the only reason why I chose.
And then you practiced it, right? Did you work for an architect?
I did for a year. Okay. And the thing is, so check this out. So 4 years undergrad, 3.5 years grad, and actually it took me like 2-3 years longer because I was recovering and stuff. So that is like almost 10 years in itself. And then you got to do like 3 years to get your license. You got to work as getting points. It's like an internship kind of. You work doing the menial task and collect points to take the exam and to get the license. So it's like you're not even done yet. And as you're doing that those 3 years, you're getting like hourly pay, like $25 to $30 an hour.
For apprenticeship, or like really, really hard work, right?
Yeah, it's hard work, man. You're designing stairs, parking lots, bathrooms, So like I'm studying under Frank Gehry, Tom Main, and then in grad school, it's like really cool. You're designing the futuristic stuff. You learn all the hot software of the time, and then you go to the real world. You're designing bathrooms and staircase, So for 3 years,
try to calm down, right?
Yeah, quite a come down. Then it's like, man, and then the student debt hit me as well. It's like, okay, the bill comes due. And like while I was studying, what made me efficient and made me like achieve, like I was really good at school and, in art and all that, is that I didn't worry about the finances. And that kind of like haunted me because the interest and the debt was accumulating. And I was like, whatever, man, the architecture will figure it out. Like, this is a good profession. I can't go wrong with this. Like, I'm making my parents proud. I'm doing like, it's cool. It's prestigious. You're going to the museums and like, you're speaking the language. You know what I mean? Yes. Imagine going to MoMA in New York and like, you're at the galleries and stuff. It's cool. It's like part of the lifestyle of an architect, but like the part that no one talks about is all the student loans you take to do that. And, I got in a lot of debt, and also like I had the surgery I had, the medical bills was out of hand, and I had to come to after a year of working in the real world, I was like, okay, I got 2 more years to get my license. This sucks. And like all this debt, and like I did my best in school. I did my absolute best. There was no regrets at all. I did the architecture to as high as I could take it up to that point. And I was like, I can't live in debt, man. Like, I'm never going to be the architect that I wanted. Like, I'm never going to be free like Frank Gehry and design whatever I want because I'm going to be in debt. And debt.
Did you feel like there was a stone pressing on you all the time when you had that?
Yeah. And I was like, man, this is like, how am I going to own my own firm? And how am I going to do like the designs I want instead of like selling out and doing the designs just to pay the bills? And I was like, man, it's just, and it was like multiple 6 figures of student loans. So I was like, I need to get a high income skill, man. So I started Googling high income skills, and like real estate made a lot of sense because it's architecture kind of related in the field. So and then I looked into that, and I started the courses and stuff. I wasn't passionate at all about it. It's like a few months. But as I was doing that, my mind opened up to like search constantly, be on the lookout for high income skills. So I'm looking at YouTube videos, high income skill. Then like stock trading shows up, and I start getting intrigued because it's related to chess. And I used to play, I still play a lot of chess, and I used to play in high school a lot of like fantasy baseball and stuff, and be like stat oriented. And so like after some research, like for a month or two, I realized, okay, so if you treat this like a profession, like architecture school, if I take it seriously like architecture school, like go deep into it and study everything about it, I have a shot at this because this is real. It's not like fake. It's not like like people want to give you the bad, advice. Oh, it's gambling. Stay away. But it's like, if you treat it like serious, and the thing is, I had that, I did my own due diligence like crazy. So like any time I got like some advice like that, I kind of like brushed it off. I didn't accept it. I was like, you know what? Because I had some examples of people online that were successful doing it, and I researched them, and I even reached out to them, and so I was like, these people, they don't have no reason to lie to me. And then on top of that, like I read books, podcasts, audiobooks.
What books did you read initially that sort of inspired you and stoked your interest on trading?
That's a good question. Let's see. Market Wizard I'm thinking of the first one. Oh, one Good Trade. I bought it for like $12 on Audible, and I listened to it like 10 times. Yeah.
So it's really, really interesting because that is, so first of all, it's a more modern book, but like almost everybody says Wizards or, Jesse Livermore, the classic books. And I've read Wizards 1,000 times. But One Good Trade is very interesting because it's a book written by a guy who runs a prop firm. And it's almost like a recipe for success because it's all about the essence of that book is focus, reduce and focus. And and master one part of the market, which I think is kind of interesting. And we'll talk a little bit about what you're doing, but it sounds like you probably took his advice, right?
Yeah. So the person that mentioned that book online was Greg Shibaka, LX21. I don't know if you're familiar with him.
Yeah.
And then and back then, and once he mentioned it, I got it. He said it the first, he said, I recommend for beginner traders to read this book. And that was it. And then that opened the gates to, like, you go down the rabbit hole. I was like, man, I want to read the next book. And I read the next book, the playbook. But after one good trade, I actually applied to SMB and I never heard back, which it worked out in my favor at the end, so.
At this point, right. The more important part is that it really gave you a template, kind of structure for how you want to approach the market, which is, I'll let you tell me. Why don't you tell us what was it about it that really hit the note?
Yeah, I haven't looked at that book since 2017, man. But it still sticks out a lot. Those early days, they're very memorable.
You started, by the way, around 2017 when you started to.
2016, I started to do that little initial research to get my a little bit feet wet.
It's astounding because it's not that you really had enormous success in a relatively short period of time. It takes people at least a decade a lot of times to just even get comfortable in the markets, and you've had meteoric rise. What do you think was the reason for why you had such fast adaptive ability to trade?
I think it's pretty quick. It's equivalent to like my art, like architecture took like 10 years, and so far 2017 was that's 7 years. I put my 10,000 hours in, I would say, and so it's not really a surprise to me anymore. The initial success, let's say 2022, 23. That when I really started to get on my stride, that was kind of like happened a lot really fast. It was surreal. It was definitely a life-changing time. But now it's kind of normal. Because first of all, 2016 to 2020, I made no money. I made zero. So like 4 years of struggle.
Were you still doing architecture? How were you supporting yourself 17 to 20?
Good question. So 2016. I started I graduated in 2016, like the early 2016 with the master's. And then that last quarter or semester, I started to look into stocks. I was like, and then with the first year, 2016 and 17, I was working like as a junior architect. And that's when I started to really look into stocks. But I was planning my exit. So I was actually driving Uber in the beginning, and then I found tutoring, because like when you're like constantly searching for like your solution, things pop up. So like first Uber, I wasn't just gonna settle for Uber, and that because Uber was draining. And then I was constantly looking for other jobs. I was like, man, what could I do? Oh, I'm good at what can I do with my skills? I can teach kids. Okay, tutoring. Let's see online if there's tutoring. Or like I'll just be searching for anything. And then tutoring actually carried me all the way to 2020.
What were you tutoring? I'm just curious.
Oh man, I tutored everything. So 2017 and 18, I tutored, because architecture, you're just like a cultured person,
Right.
So I taught math, science, English, writing, college papers, Spanish, drawing.
Architecture is actually this perfect intersection of art and science.
So trading is an art and a science. Interesting. So like I went to the University of Florida. I'm actually going there next week. They reached out to me earlier in the year, and they were very proud of me of everything I've achieved and stuff. And which is interesting, because usually the universities don't acknowledge stock trading. You know what I mean? It's actually short selling, so.
Especially short trading, which is really, really the backwater of the business.
But I guess the way I go about myself, the way I've always presented, like in podcasts and stuff, is like I take it very seriously. Like, and I always draw back to my architecture profession, like the professionalism and the seriousness, and like the way I do. I just do technical analysis, but I do fundamental analysis. I do a historical analysis. I like case studies. I like research. And that comes from like my architecture background of like You got to know a lot about a lot of things, and then piece the puzzle together, and it all comes together like a symphony. That was like my lecture at the school, the market as a symphony. You know, it's like all the I'm the composer of a symphony. Like, this is like my symphony right here. All this information coming at me, and you got to make a decision with all that information. It's cool. And with architecture is an art and a science, and trading is an art and a science. And one thing I want to do with the University of Florida specifically is introduce the architecture students there, because not all of them go to become architects. It's just because they still got to get the master's and the license. So a lot of them go to other related fields, and do very well. It's a very good school.
Right.
But I'm like, trading could be a possibility. Like, I haven't met any architects doing trading. Maybe I've heard of a couple. There's one market wizard, Liebstein, I don't know, the one with the L. He was an architecture student in school. I reached out to him for a podcast, but he's too big for me, man.
Was he the FX guy? He traded Forex for Salmon, or am I mixing him up?
I'm not sure. I do know he was one of the market wizards, and I think it was Liebstein or something like that. I'm not sure, but he has his own hedge fund, and he's the only one I haven't heard. And architecture is such a beautiful profession too, because for trading, because you got to be very meticulous, detail oriented. Like, for example, I'm in a skyscraper right now. Like, to go in the elevator all the way up, there's earthquakes. I'm not scared. The building is so efficient. So, so it's like getting trading to that level of like, you go, like, I walk in the door.
You can be earthquake proof. Make your trading earthquake proof.
Yeah, exactly. You go in, it's just like it, it's like a job, so a profession. So if you come in with that, you'd be all right.
Right. Obviously, it wasn't easy from get-go. So I imagine, what was sort of like the first year like? What did you do? What kind of experiences did you have? What kind of lessons did you draw from your first year? I'm just fascinated in your beginning story. What happened there?
So I did, one of the decisions I'm very proud of is that I decided to do short selling since the beginning. And I was like, I knew right away, I was like, man, I'm just sticking to this. I'm just going to master this.
That's, first of all, short selling is a incredibly unusual part of the business. I love short selling, but I always, I always say I'm like the 5% of the population. To be a short seller is by very nature to be a skeptic and to be a contrary, to be on the opposite side where everybody's buying, you're selling, when everybody's sort of, or, you're really just sort of contrarian in nature, I think. So what do you think attracted you to that side of the market? And why did you decide to be a short seller?
Very, very good. So, like, I don't think I've ever addressed this question in public. I know it internally. It never just came out. I never thought about speaking about it, but I thought about it. Yeah, I was never a contrarian. I was never starting. I just wanted to fix my financial situation, and I was in bad shape, man. Like, I was like, landlords banging on the door. I was like, man, and a student debt piling, the interest is multiple six figures, the interest is running up every day.
No, there's nothing worse than compound interest working against you.
Yeah, compound interest working against you. So, and then on top of that, it's like, I'm never going to achieve my dreams like this. It's like, it's just a momentum killer, it's life killer. And like, everything just sucked, So I saw two examples of a couple of examples of successful traders that were short sellers of small caps, not just like the big caps or anything.
On YouTube, how did you just sort of stumble on information?
Well, on YouTube, online on YouTube and online communities and stuff. So, so I stumbled upon them. It was Tim Grattani, and then after that was Stephen Ducks. So it's those two guys. And, once I knew from Tim Grattani that it was possible, I just needed to know it's possible and that it's real. And I could just put all my focus, because if it's not real, you're wasting your time. Like these gurus online that do the Lambos and stuff like that, you can be as studious as you want. But if you're studying the wrong material, you're wasting your time, 100%. So I was like, as long as it's real, I'm going to go for it. That's it.
Like what, did those guys show you? Did you watch them trade live?
So they weren't verified by Business Insider. I'll tell you that. But like, not everybody has to be, you know what I mean? So like, but they were vouched for by many different people online and like credible people, that I investigate.
Did you see them trade? Did they make calls for you? Like, I mean,
Yeah, they made trades. They had Gritani had webinars, and you know,
yeah,
I watched them, and
right,
they were recorded as well. There was like 70 of them. He had a website with level 2 tape reading, and like
right.
he just seemed like an authentic person, and I reached out to him. And I followed him for a long time. It wasn't just like a small amount of time. It was like when I decided, because I didn't have any money. So like in order to invest in materials and stuff, I had to know this is real. Like like going to architecture school kind of deal. So once I did all the investigations I could, like for this is like 2 months, all the free material, I devoured every single thing and went down the rabbit holes. I was like, okay, so this is real. And this guy has made $1 million. He's people vouch for him. Many people vouch for him. And you know, if he did it, I can do it. It's like that Bannister guy that broke the 4-minute mile. It's like once he did it, it's like now it's possible. Other people, yeah. So like as soon as I knew that it's possible, and you know what, on the way to 1 million, maybe I don't hit 1 million, but if I do study hardcore, this is going to be a pretty good situation for me. You know, it's just going to 6 figures. It's going to pay more than architecture, you know? So unfortunately, the architects, they don't get paid very well. It's unfortunate, man. They do the most beautiful work. Everyone is affected by architects, and right. they do, you know, it affects everyone's lives, and like, it doesn't reflect in the paycheck, you know? So unfortunately.
A lot of professions like that. Teachers also.
A lot of professions. Yeah, it's not only architects. And then it's all the student loans that go with it. No one talks about it. Like when I was in grad school, no one we were in this architecture studio all day and all night, and that was like a taboo topic. No one talked about it, you know? But the University of Florida I didn't have any loans over there. So, but
so you get involved in short selling, really sort of discovering it. It wasn't anything that you had a strong direction.
I did like so I saw early on the short report firms. I thought that was cool. I thought like, doing research at a firm and bringing down the bad guys. That I reckon I vibed with a lot. I was like, and as I was studying the material, and I couldn't even trade, I imagined myself like being part of like a firm like that. And eventually I did actually become, I don't know if you're familiar with a couple of short reports I was part of, with taking down a cannabis company in Colombia and stuff.
The thing about short selling is, of course, it can be very lucrative when you're right, but it's an asymmetrical bet because a stock can only fall to zero, but it can rise to infinity, which I'm sure you're aware of.
Yeah.
So short selling is like stepping on a landmine, you know, or missing a landmine. Because if you get a short squeeze, it doesn't matter if the stock is a fraud. It doesn't matter if it's a Ponzi scheme. They can just squeeze you out by going vertical. So were you aware of those risks when you first started? Did it
I was. And fortunately, my defensive nature, you know, as a person that's starting out, because in 2020 is when I funded the account over PDT, and I was so scared to trade. I was so scared, man.
For those of us, because we have viewers all across the world, PDT means that you can trade I forgot what it's something
pattern day trade rule.
Pattern day trader, right? Pattern day trade rule. I forgot about this. So in America, unless you have $25,000 or more in excess of margin, you can't day trade stock because it's designed there to protect people who have small accounts from blowing up their accounts. So what David is saying is that he had gotten enough money in his account so that he could now day trade because you had to have a $25,000 deposit limit just to even come into game. It's like putting money in poker. It's just your entrance fee. So go ahead.
Yes. So before 2020, I traded from 2016 to 2020. I knew that like after my initial bit of studying, I knew it was like this is actually a good thing for me not to have the money to trade with because I don't know anything. And that is the hardest risk. So that's when everybody loses big time. The outlier losses, that's why most traders fail, especially most short sellers fail.
Yes.
I see a lot of them. You're smart. I see a lot of, over the years, many smart people, they come with a 30K account, just a little bit of a cushion over PDT, pattern day trade rule, and they trade for a few months and you don't see them anymore. So because they had one outlier loss, got screwed, So early on, me having only a $2,000 account while I studied all the histories, all the manias, Tulip Mania, the South Sea Bubble, 1920s, dot-com boom, 2008, 87 crash. Like when I started, I love those.
Yes.
Yeah, I love the history lessons because like human nature is part of that, a big part, and it never changes. So you see a consistency there, and you can relate it to now. Like we were talking the other day about NVIDIA comparing it to Cisco.
I was going to ask you today. We're now talking one day after NVIDIA reported earnings, and the stock, blew past its estimates, but they just missed guidance, and it collapsed in the after hours. Although it rallied a little bit in the post hours.
So what's your take on that now? Because from your experience with Cisco, because it's very fascinating. So I don't know if the listeners here know about Cisco because you lived it, and it's reminding you.
So Cisco was a company that ran all the networking for the internet. It had all these network hubs, and everybody thought that because the internet was going to be the future of the world, this is late 90s, that Cisco was going to forever be an incredibly dominant company as a result of this. And what happened was, of course, they ran it to like 100 times sales. Cisco still stays in business. It's still running the hubs of the internet, except now it's infrastructure. It's boring. There's no growth, and the stock has never, ever come back to the value that it was in 1999. So in other words, you have like 25 years of no returns. And it's funny you talk about NVIDIA because I have a friend named Eddie Elfenbein who's actually a money manager. He's on Twitter. And all week long, he's been trolling everybody on Twitter because NVIDIA has been around since the 90s. And one of the things he's been posting is that NVIDIA 2001, $60 a share. NVIDIA 2014, $60 a share. That people don't quite understand. And, another good example of this is also Microsoft. For example, Microsoft, Bill Gates leaves Microsoft. Microsoft triples its revenue under Steve Ballmer. The stock does nothing, literally nothing. It was flat for like 10 years. So the fact that the company makes money means nothing relative to the stock. It's the rate of growth of making money. It's the expectation of future growth that really, really matters. And I think NVIDIA, like all businesses, is hitting its natural limit. Yes, everybody's going to have AI, but AI is going to be like electricity. Already, the cost of intelligence, the cost of computer intelligence has dropped by like 90%. It was like $9 an hour, nice, 90 cents. It will be a penny an hour in terms of computational power. And what that means is basically margins are going to compress. And it doesn't matter that everybody in the world is going to have an AI assistant in their pocket. It'll be worth $100. And NVIDIA, I think, ultimately will finally hit its limit. Maybe not yet, but that's sort of my thesis. And I'm talking in my book. I'm short 49s, 48s in December. It's working, but anyways, the point being is that when you're short, as it sounds, you really have to think ahead. You're not thinking about what the reality is today. You have to think what the reality will be tomorrow and the next day in order to be successful. Would you say that's true?
I say that's true, but you also for the small caps, especially, like you can be right, but most people what's the saying? Like you can the market can remain irrational longer than you can remain solvent. That goes for short sellers too,
I mean, I don't think that that is like 10 times more important for short sellers than it is for long sellers, because you can hold a stock forever. The worst, especially if you don't buy it on margin, you can't lose more than you've put in, right? You buy $10,000 worth of stock,
goes to zero, and that's it. Yeah.
It's it. That means you can hold on to it till, drops to $1 and then comes right back up. I mean, the quintessential example of that is Amazon. People who bought Amazon 1999, it went 90% against them. But if they held it, if they were just like Rip Van Winkle, they went to sleep and they woke up, they're like, oh, I'm in the money. And it came right back up. You can't do that with a short stock because the short stock can go twice, 3 times, 4 times, 5 times, 10 times against you, and you just don't have enough money to stop. So what do you do to prevent from getting blown out by short squeezes?
Well, first, I have a immaculate set of rules. It's a super rigorous discipline. Like first, discipline. I practice discipline with everything that I do, inside of trading, outside of trading, my life, my diet, every single thing. So it's like it's an easy thing to exercise. But my criteria is just very strict. So like off the top of my head, I don't trade stocks under 1 million float, under 2 million float. I'm very cautious. I recently stopped trading biotechs. I haven't traded any Chinese domiciled stocks in over a year and a half. I don't trade any high institutional ownership stocks. Anything 40% or over is probably most likely no touch. 70% or over is absolutely no touch. I keep the stocks that the trade in a bucket of 250 million market cap or less. I trade only on extension. I don't chase stocks down as they're flushing down. I don't,
Sorry, you mean you're selling rips? When you say you trade an extension, you're selling rips.
Yeah. If all the criteria meets, if the float meets, if the market cap meets everything, and the news is not a certain news that's not that it's a vague press release or something like that. And I will short on, like, for example, today I shorted WORX. It was it halted up in the morning, and after the halt is when I grabbed it, and it was great. It flushed, but the trick for that one, and that's a good example. It's like an archetype of like the short squeezes that are happening these days in the small caps of what I trade. Is that a lot of short sellers, they're anxious to short. They want to short the top gainer. They all got a short before work. They all work, and they want to trade before work, and a lot of them. I mean, not all, and they all have like 30K to 50K accounts. They're all aiming for the same thing, and they're overcrowding it. And what happens when they start covering? It's a domino effect. Squeeze happens, and the stock halts up because these are small cap stocks, very low market caps. They're going to halt up. And then after the halt up, after they all get stopped out, which is usually the high of day or usually the high of pre-market highs or some, and if not those two, it's another level that everybody sees. It's a clear levels of where the shorts are going to stop out. And then that's where I'm looking to enter. So that's like part of that symphony approach. That I'm like piecing the puzzle together, coming with the thesis. But and then on top of that, like the process that I look to enter, the checklist, like a flight checklist before taking off, I have a broker max loss. I have a max dollar amount. I have a max position size. I have a like 4 or 5 safety nets.
If you had a hypothetical 100,000. You're obviously trading with much, much larger capital than that, but just sort of for our viewers' idea. Let's say you had a hypothetical $100,000 account. What would be mass allocation? What would be the mass loss on a position? Given your criteria, percentage wise.
So this is the part where I used to get confused when I was starting out. I was like, oh, why isn't everybody has a 100K account? Why didn't they, they all have the same thing? Is like everyone feels it different. Everyone's net worth is different. A 100K account, okay, like I'm willing to put a max stop for 100K, 10K max loss. Even in a position size, a 20K position, but because I have a lot of money, I can it's like I'm not gonna feel it either way. Now, when I was starting out, I was like guarding the Holy Grail. I have a book that I've been writing, and like it's like when I was starting out, I was like. $1,000 loss was like I had to I was so scared to lose $1,000 from a 30K account, a $1,000 loss. So like, is that now with the 100K account, 10K max? So it's not about that. Like for me, it's because I know what see with small caps, what I've been able to do. I can grow a 30K account and make, I don't know, 10, 15K a month off that if I, on average, just for a 30. So with the 100K guy, so it's like, if it's a lot different for me to but most of the time I will have a $10,000 max loss. In certain situations, I might increase it to 20K. In some situations, 5K. If I realize I don't gotta stop out max all the time, but I do have those safety nets there in case, because I have seen stocks on the short side just rip and go halt to halt. That's the scary part.
That is the scary part, because there's no ceiling there. You can just So let's talk a little bit about details. So there's 20 trading days in a month. How many of those days do you usually trade? You try to put a position on almost every day, or generally how many?
Yeah, good question. So I like to trade, man. I love trading. I love this continuous puzzle being solved and the art and the science that go into it. So but and then every once in a while, I would say like on average, every 2 or 3 months, I'll just go on a trip and I'll trade part-time on the trip.
When you're fully focused, 20 trades, is it 1 name per day, 2 names per day? How many names would you do it?
Today I traded 4 names. So I'd say that's about average.
That's
on a decent day, probably like 4 names.
Is there like a list of 100 that you've sifted through? Because you went through quite a list of don'ts, so you obviously have to throw out a huge, like, what do you filter from? Do you have a watch list that you start?
So yeah, that's another good point. So over the years, and it's not hasn't been that long. I've been full-time for 4 years, full-time trading. These stocks, I've seen them over and over again. I know there's a lot of them. I know their stories. And ever since I canceled out the biotech stocks, now it's become like a smaller basket and I hit it with bigger size. Now it's more clear to me. They stand out more.
Well, are these specific industries, or it's really just a basket?
Yeah, just these are all like fake companies, pretty much. All scam companies. They got no cash. They got a lot of dilution hanging overhead. And they got some, like at the stock MULN, I shorted that one today. I love that stock, man. It's pure trash. It's a scam. The CEO's, has ties to like a lot of dumb stuff. He's done so many reverse splits with the stock. And like he went on like, I think Fox Business or something, and they asked him about that. And he just hangs up. This guy is hilarious, man. But like it's a scam. So I like that. It's very predictable. I know it's not going anywhere. I just got to watch out for the supply and demand, So like if the supply is too low, like let's say they're fresh off of a reverse split and the float is like 1 million or less, or even 2 million, that thing can rip. So I got to be careful with that. But if it's like right now, it's 9 million. It's very safe to trade.
It sounds like a lot of these stories that you're trading are really not fundamental stories, because they're all fundamentally garbage, right? Your first thesis is like, it's really not a real company. That's what I want to look. It's much more like you say, what you're focusing on is supply and demand, both from a technical perspective on the chart, but also from event-driven perspective. How much float there is, how much dilution there is, who's taking, the float back. All of the corporate events that are going to affect supply and demand is what you're looking as well, right?
Yeah, so I like to confirm first. It makes me more convicted in the trade to know, okay, this is a borderline scam. This company, they're EV vehicles, but they're never going to do an EV. And they're just like, they're listed on the market to get cash. And this guy's collecting cash from the market. And like several people, I know there's some insiders that are attached to the name. They appear over and over, and they're constantly doing pipe deals and doing offerings and getting warrants. They're getting constant warrants and diluting selling, exercising the warrants and diluting the stock. So like this is very predictable. And so like I know the end game. And it's like when you know the end game, now you just gotta have a thesis of how you're gonna play that. So it's very advantageous to know the end game and to know, okay, what it is you're dealing with. And now when you understand the supply and demand.
You ever been fooled by any of these guys? Like where I'm fooled by meaning that the company actually turned out to be a real company and got a big contract and things like that. Have you ever been on the opposite side?
Good. Yeah. So today, actually, or yesterday, past week, to tell you the truth. Okay. So RCAT, this drone company that I thought was complete trash. In 2021, I was in Puerto Rico working with some short report friends. And there was this drone company based out of Puerto Rico, and it just got uplisted from the OTC to NASDAQ. And OTC is all scam, it's all pink sheets, so it's listed on the NASDAQ now, and it was going, and we were like, I walked by the offices like, yo, let's do a short report on this thing, man. It's trash. Haha. Look, their office is in the yacht harbor. It's not even an office. It's a yacht harbor. And, and I was like, and so it was a joke. And we shorted it back then, went down. Cool. We, did all right. And then now, like the other day I look and it's up a lot. It's up a ton. Like for the year, it's up like crazy, from like 50 cents to like $7. The market cap is like 400, 500 million or something like that. I don't trade stocks over 250 million, because one of the ideas behind that is that it's likely to be a real company when it's that high and it sustains that market cap. It's probably a real company. Now you got institutional investors involved. You got long-term investors involved, hedge funds, as they looking to buy these possible stocks that are real companies with a market cap like that. So I looked and I was like, man, this thing is ripping, because it's a drone-related company, and I guess now it's like is war in the looming.
Yeah.
So and it's been all year long, so it's just been trending all year, and I guess it's real now. I don't know. I guess it's a real company now. So.
You backed off, yeah.
Yeah, I not for me, man. I'm not trading that thing. So
now you have all these entry criteria that you just listed. What about exit? Do you do partial exits? Do you when do you cover? What are the rules for once you're starting to see profit? What do you do? How do you work the profit?
So when I was first starting out, I would below PDT, I would cover when it was a first red day. I'll short scam stocks and over a period of time, and then cover in the first red day. That's how I got around PDT. But I didn't make much money doing that, but I learned a lot. And that was part of my playbook for a long time. But now the borrow fee rates are too high to swing. So I like to keep my short trades for a short time period, if that makes sense. Like, I like to be very nimble.
Like, in other words, a couple of hours, you're closing before the close of the day, so you don't have to.
Before certain time periods, like let's say I like to cover before like 11 a.m. Eastern, be covered up completely. If I do trade something that's super extended or something later on in the day, I keep it on a short leash. Like, so I cover on big flushes, because they move up and down. So, but if I get one candle that's more extended on the downside, then the others I'll cover, and then I'll look to reinitiate the short when on the bounce, because a lot of times they bounce. So I'll play a lot of the noise.
Right. Interesting. Yeah. I mean, it makes sense. But basically, you're always quickly trying to cover the position and try not to carry overnight risk. Both
exactly.
You don't want the gap risk, but you also don't want to pay the borrow fee, which could be, the borrow fees could be as expensive as like 5-10% a day sometimes, right?
These days, yeah, especially since they enacted the T+1.
Right.
The clearing firms have had a hard time adjusting. I think this might be like this for a while, where it's almost most of the stocks I trade, I'm looking at them right now, borrow fee rates out through the roof. But I still use my long-term thesis for a short-term trade. It works very well, because then you have that same conviction that this is trash, this is a bad company, the fundamentals, and then everything else checks out, the float, the criteria, and then the supply and demand, the technical analysis, together with that thesis that you have. Like, this is a temporary move. So like. Yeah, and I'll just play in and out of that. How
many times do you how many times would you go, like 2 or 3 times a day? Sometimes you sell it, buy it back, bounces, sell it back. Do you ever do that?
All right, probably like each stock I trade, maybe like 100 times each.
Hold up, 100 times.
I trade a lot of shares today. Yeah.
Oh my God! Oh, so you are really flipping. You are just okay. This is very
for like an hour or two.
Yeah,
and I'm done.
Dude, my friend, you are part of the Scalper Club. Welcome to the club. But think, fuck, like,
Hey
here I
man, it's good.
you make it
It's a
through.
good
I do
strategy.
research. I do all this work. I have all this my symphony of stuff. But at the end of it, my friend, you're scalping to the short side. Welcome to the club. Nice.
Yeah, I'm cool with it, man. So I used to do swing trades and over like man and hold it all day long, but you just open yourself up to more risk, especially these days when there's overcrowding with shorts on what I trade. You're opening yourself. There could be a halt up, a swipe up any second, and then all of a sudden, so
there was a great market wizard, Mark Weinstein. I believe it's probably the first, maybe the second book. I'm not sure whether he's in the first or the second book, but he's also obviously a very short-term trader. And he uses this analogy, which I absolutely love. He says, I trade like a pigeon. And he's obviously a New York trader, right? To Chicago. And his whole thing was, if you ever watch how pigeons are in New York streets, they will just pluck the tiniest bit of food, right? They won't take a whole big bite of food and just fight over it. They take the tiniest little bit of food and pluck it and pluck it and pluck it. The advantage of that is that nobody can ever kill them. If you ever see cars, just at the last very second, they're plucking the food. They're not busy with the food to fly away. He says, that is me. I will never take a big profit out of a trade, but I will never get killed by it because I'm like a pigeon. I'll pluck it all out. And I always thought that was a really, really cool analogy. That's pretty much how I trade. I'll take 1 point, 2 point, 3 point. There's lots of points during the day that you can take out of any asset, as long as you are not greedy, as long as you're not greedy to that, to that one particular
excellent
trade.
point. I'm with you right there, man. And that's part of like my risk. So I have the safety nets. This is one of my active safety nets. Keeps me safe, on the short side, especially when things go like it can rip super to infinity,
Right. Now, the other thing that's interesting about you is you said, you're sort of a big believer in mindset. And you said you had a very transformative year. I think it was 23, where you really took your game to the next level. Can you talk a little bit about what was the shift in your mindset that gave you the confidence to execute at much larger size with much bigger P&L possibilities? What was the transformative part?
Yeah, that's very good. So, when things happen quickly, so 2020 to 22, it's like, is this real? And did I deserve this? Like, it's just like, I'm making so much money, the architect. So I'm relating the money.
You were having an imposter syndrome moment.
Yes. I like, am I worthy of this? It's like, I just made $100,000 in a month, and that's like that's way more than architect does all year. And like, I was working Uber for $100 a day. I just made 1,000 today or 2,000. Like, this is crazy. Like, and I'm like walking in the real world, and I'm like comparing myself to everybody. I'm like, man, it's like, why do I deserve all this? This is crazy. And just like relating the money was started to get like, I hit certain levels. Like, let's say at one point I remember I had really hard time passing my accounts at 75K. I would always like withdraw it down to 40K or something. And then I would hit a limit. Like, I would hit a daily limit, like 2K, maybe 3K. And I would feel like a lot of turbulence. Like, it was very hard to break through to like 4, 5, 6, 10,000 in a day. I just like, it seemed like it was a lot of inner turbulence. But for 1,500 or 500 to 1,000, it was very comfortable after a while. But now I was like, man, how am I going to ever break through this? So then I got in contact with so I have a podcast, Friendly Bear, and I used to interview interview everybody that I could get my hands on, a lot of high performance coaches. And then I interviewed this one guy, Sam, in Dubai, Sam Dagash. And then we ended up becoming business partners and starting an academy. After like the work that we did together to help me get through all that. And I worked on my relationship with money, my limiting beliefs, like, why can't I have a $10,000 a day or whatever day I want, like 20,000, 100,000, whatever. Why isn't that possible? Why do I like, and also like, why am I comparing myself with all these people? Everybody has free will. Everyone can study. I studied so much. I sacrificed everything, that the opportunity is out there for everybody. So it's like, anybody can do it. So I don't need to feel guilty about it. And it's like, so it's, yeah, so, and then after that, it's crazy. Once you work on that and you come to the self-realization, it's like, it's poof, it's gone. It doesn't affect me anymore. I'm way past that. You become like a different person. So like when I look at podcasts that I've done, maybe in 2022, 21, I could like, I can see it. I was like, man, like I seem like I'm a different person. I'm kind of insecure there. And that's fine. We all evolve. You know what I mean? So I got more comfortable with myself and where I'm at and my identity, So like, for example, when people ask me what I did back then, I would still say architect. I made almost $500,000 in trading, and I studied so much, and I was ashamed to say I was a trader. So like now I have full confidence. You ask what I do, I say I'm a trader. I trade. I have a podcast. I have an academy. You should come to the event, and check out my podcast.
What is the academy that you do? What is this work that you do with other traders? Tell us a little bit about it.
Well, so it's the Conscious Trading Academy, and Sam covers the mindset. I covered the skill set. So I go over. I picture it like going back in time to David, myself, in 2016, and going back in time to teach that guy a more streamlined way to learn. And to that, what does he need to learn to fast track him to short sell? Because like, I was lost, man. I was just devouring whatever I could and kind of figuring it out on my own, that's like kind of trading in general. So I came to do this academy. I co-founded it with Sam. He's like, all right, if I'm going to do this, I want to do it to fast track people to do what I did, to do like with a small amount of money, and like inspire others to like streamline, to know. I want to teach everything that is necessary for you to have the highest odds to succeed.
And do you teach them the process, or do you teach them the actual short trading techniques that you use?
The short selling, everything that I did, because I decided to focus only on short selling. I started to incorporate some long strategies recently. I presented them at my last conference. It's very good. And I plan on evolving it more, do longs. But like, I go over. So I approach the short selling teaching like going to school to learn. You start with like English 101 and English 102. So first you learn, the every single thing from the bottom up to learn the strategies, the scaling, the history lessons, the case studies, everything that goes involved with it.
Cool. So you guys had an event recently, right? My friend Austin Silver told me about it. You guys
That's right. Yeah. Austin was there. Austin was a guest speaker. And
you guys had more people there. And then how was the response? What did people?
It was great. It was our best one yet. It's our third conference that we've had. Beautiful conference. And now actually December 6th and 7th, I'm actually having a workshop. It's in Los Angeles, whoever's interested. But
you do these in person, right? These are in person. Workshop.
Yeah, in person. So it's going to start from 6 a.m. here in the West Coast.
Wow. Okay. So you going to trade the market? You guys going to trade the market?
Yeah. So I'm going to go through my process before the market starts, and then at the market, trade the whole day. And then afterwards, trade review for 3 hours. And then Saturday, we're going to have a mastermind. I'll give a little small lecture and then Q&A for another 4 or 5 hours at the Athletic Club, one of my clubs over here. And then a social event. Yes, 2 days. Wow. Intensely,
It sounds like a cool event. Sounds like I want to come.
Yeah, you're welcome to come, man. Yeah, absolutely. Yeah, bring Austin if you. I know. I think Austin's somewhere else now, but
unfortunately, I wish I could have. But my life is being torn 1,000 pieces. But it sounds like an amazing thing to do. David, I want to thank you. This has been an amazingly fascinating walk through an unusual and also I think underestimated in terms of lucrative ability and profitability part of the market. Thank you very much for sharing your process, your ideas. Anything else you'd like to let us know? I'll give you the final word here.
No, I mean, you can check out my podcast, Friendly Bear.
Okay.
Some good material there.
I'm definitely going to become a listener on that. That's where you discuss. You said you talk to everybody. It's not just on the short side. You talk to.
I talk to everybody. Yeah, short. That's why it's the friendly. I was like, man, you need to put like a friendly word in there so that people don't get scared.
Well, thank you very, very much again, because this is really, really a wonderful, wonderful talk. I hope you guys really enjoyed it. Please be sure to subscribe and like to the Trading Battle channel so that we can bring you even more interesting, fascinating content for the trading battle. This is Boris Schlossberg. I'll see everybody in the markets. Thanks again to David Capablanca, who has been an awesome guest, an amazing performer, and may you guys all follow in his footsteps. Boris Schlossberg, over and out.